What's up, everybody? Dave Bartosiak here, and we are kicking off the new year with a new you and a new me and a brand new chart of the day video. This time we're talking about Cerence, ticker CRNC. And I gotta zoom out on these, right? Big picture, just to show how crazy things can be. That a stock can be down here at $10, rally all the way to $1.40, get destroyed for a very long time, and then all of a sudden come back to life. And we've seen this happen again and again. I don't even really want to get into this part, right? Well, we do see these huge rallies, and then keep an eye on those 200-day moving averages, because as things fizzle out, inevitably they give up on the 200-day, and then it's lights out. So precautionary tale, I suppose, but I'm not going to tell you a precautionary tale about late 2021. That would be silly. Let's go ahead and zoom on into what's happening lately. And what's happening lately is a resurgence of epic proportion. So this stock was just kind of bouncing around in the doldrums, in the $3, even high twos. Then they have a nice little earnings report. We got a huge spike up. And then, something's happened recently where we've had this rotation. It was basically like we went from AI names, or really even before AI names, we had some small nuclears, right? I do SMR just because that's kind of the one that I follow the most. Then over to AI. And then now it's all about the robotics. And we have CES happening, the Consumer Electronics Show, kicked off with Jensen Huang's keynote speech. And he talks a lot about robotics and how that's sort of the next part. The physical AI is the next part that we're going to see. So what have we seen here? Big jump up on that earnings report. Didn't sell off though. Stock didn't just dump. And then you get news of these new partnerships. And then all of a sudden these things go absolutely crazy with huge volume spikes. Now, it's hard to look at this and say, okay, this is the change, that this is it. We're done with all this, right? Just because you see the negativity before. And when a stock goes this parabolic, when it goes from $8 to $28 in 2 days, you know that that's not sustainable. So there's got to be some back and fill action that's going to take place, right? And you do also have these big gaps, which makes me really nervous. When these things skyrocket like that, you just got a sense that eventually they're going to get into this gap. So we've been telling these precautionary tales here on the chart of the day recently because it's popped up so often in this market. And we're not doing it to say, stay away from these stocks. We're doing it to say, just manage your risk, okay? Don't go all in on something like this unless you could pocket or you can stomach that downside. Everybody loves when the stock rips up 143% in a day, but how are you going to feel about it when it drops 50% in a day, right? Because it can't happen. And on the way down, you have some nasty dips here, 34%, followed by a 14, followed by, it's just gut-wrenching. But how do you trade anything like this, right? Because you have this 50-day moving average is down under 8. The 200-day is down under 6. So obviously a little bit of patience should pay. The other thing is we could draw our fibs. So if you draw that fib from the bottom of the day before things went nuts to the top peak the other day, you can see some fib levels down here. So one more conservative way to play this is to wait for a test of the 61.8 to enter long, okay, and targets up above the highs. So that's one way. Now, what if it never comes down? Well, then you never took on the risk, right? Which is fine. I'm totally fine with a stock passing me by and skyrocketing because it didn't give me enough of a dip that I was comfortable buying versus chasing something up here, right? And then all of a sudden the bottom falls out on you, okay? So for me, I'd be more patient. I'd be looking all the way down at 15, 20. There's been plenty of times where these stocks have passed me by. And then I get comments like, aha, you missed it. And then inevitably 2-3 weeks later, guess what happens? I get it. And then I go back on YouTube and I start talking garbage. Okay. Of course I do it like a gentleman. So, but still. So this is what I'd be looking for. I'd be looking for a little bit of a pullback before I went nuts into anything like this. And you can run these fibs intraday too. So when you're trading throughout the course of a day, a day like yesterday, because you knew when you're looking back at that, And then you have some spots where there could potentially be some selling. They took out the lows of yesterday. I know they rallied a little bit today. So you always want to keep the range of the previous day or the previous couple of days in your mind, right? And even if we flip, I'm going to flip this on its head so you can see. If you're using that big range and extensions off of that range that first day, that's pretty interesting there, because the open was basically a 38.2% extension of the trading range of that day. Now we've gotten down below that January 3rd high. So now we're working inside of this range. So wait for the close. Does it close back above there? Then we think we're playing over here. If it closes down in here, now we really got to concentrate on these levels moving forward to see where there might be areas of support and resistance. But again, that's more of a day trading kind of thing, which is risky business, my friends. So overall, I'd be waiting for a much more substantial pullback to enter in a stock like this, if in fact that was something that I wanted to buy over the long term. But be very careful when you're chasing these names. I know it's fun to talk about the stock that's going bonkers, because look, this used to be a stock that went bonkers, right? So those folks that were chasing it up here in the 130s probably don't feel so good, when the stock starts to tumble and it gets back into those single digits. So you can tell a lot from just one stock chart. And even in the history of this one, there's been some ups and downs. All right. So there you have it. There is my chart of the day for today. It's ticker CRNC. That's Cerence. Be sure to follow the author here on Zax.com. Subscribe to the YouTube channel so you can get notified when we do our next video, which for me will be tomorrow. So for everybody here at Zax, I want to say thank you, and we will see you then.